everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 2nd of March, 2018. The market lost a little bit of ground here this week, not including the semiconductors, and bonds were up a little bit. But across the board, it was pretty weak. And let's take a look at the action and see what kind of damage was done. We'll start with a daily chart of the S&P 500. And as we know, we've recently bounced from the rising 200-day moving average. And we did fall back down below the 50-day moving average this week. And when we take a look at the 30-minute time frame, you can see that we are below the volume weighted average price from the low. We came right up to that here at the end of the day, and we are below the volume weighted average price from the recent peak. So heading into next week, here's how I think we want to look at it. Number one, if you sold short today, as I mentioned to subscribers, you were late on that call. As we often see, when the market gets extended and then breaks down, it is typically a bad idea to sell short. You have to ask, where has it come from? Now we have, however, a rally up to this volume weighted average price from the low, and we're below the volume weighted average price from the recent peak, and we're below a declining 5-day moving average. So we have to look at this market still with a bit of caution here. Perhaps we see something like this. This would be the bullish scenario, is that we come up, make a higher low, and then get back above that 5-day moving average. The bearish scenario would be we do something like this and then break down. So I'm not here to make predictions. I'm here to manage risk and to do that on my chosen time frame, which is a swing trader. As I've said last week, very happy I'm not an investor, because this is I think this is where you have to just have faith in the longer term trend if you're an investor. We came down to a 50% retracement of the rally off the lows, but again, we are below the volume weighted average price from those lows. So the jury is still out here a little bit, and what we have to do is assess it each and every day and look at it and say, how does it fit into the bigger picture of the time frame that you're actually trading? As for the Nasdaq came down below this prior band of support that we were looking at. And again, as I always mention, you don't want to be a short seller after a decline like that. Today we saw that it would pretty much touch perfectly on the volume weighted average price from the November 6th low, and that's where the buyers came in. These are levels that I've pointed out on Twitter both Wednesday and Thursday evening. So if you don't follow me on Twitter and you're just looking at this weekend post, I still put a lot of free content up there. And besides, I update these videos each and every day for subscribers. But we're up to the volume weighted average price off the peak. So if we are going to see that this market can recover, it might look like something like this. That is a lasting recovery. It might look something like that. If, however, we fail here in the intermediate term, which we are below a declining 5-day moving average, so we have to look at it as most likely it will continue lower. Most likely doesn't mean you sell short. You don't sell short on this strength. You sell short in this case. If I was looking at the trying to figure out where to short the Nasdaq, I would say that one, we can look at the VWAP off of these lows and then off of this peak, and say that if I wanted to look to short this market, I wouldn't short it on strength. I would short it as it looks something like this, and then to short either here or perhaps below this level with a stop above the most recent relevant lower high for a swing trader. So the Nasdaq on the daily time frame, we did close above that rising 50-day moving average. Some people will start calling this a double top. Those are people who don't know what a double top means. A double top is we hit the same price or close to that price, we pull back, make a higher low, we hit that same price approximately, oftentimes it is lower, and the double top is completed once we break below the low point of what ends up being an M, and then we take the height of that pattern and subtract it from the breakdown point. So we're not close to a double top. Don't listen to people who say it is. They don't know what a double top actually is. The Russell 2000, let's actually go to the semiconductors, because the semiconductors, this is a perfect case of not chasing a move. Two examples of that I've pointed out this week to subscribers are, one, the people who shorted on a break below the December low did not ask themselves, where had that market come from? It had dropped from 108 down to 95. Shorting below there or setting stops below there, you got your stock stolen from you. And then as it rallies up here, to be a breakout buyer up here, to think that, hey, it's at a new all-time high, it's a breakout, I'm going to buy it, you have to ask yourself, where has it come from? How much energy has it expended? And what we've seen here is a perfect example of shorts getting trapped here and longs getting trapped up here. These are uneducated participants in my mind because they are not considering how much energy was expended to get to that breakout point. For these semiconductors, they are, as we saw, up for the week, and we are above a rising 10, 20, 50-day moving average. So, and still above the year-to-date volume-weighted average price. So when we look at a 65-minute time frame, we can see, actually, let's go to a 30-minute time frame. Each one of these candles is 30 minutes. We maintained above the volume-weighted average price from the recent low. So next week, I wouldn't be really too concerned about these semiconductors unless they broke below there. And you could always make a case that, well, that's a shoulder, that's a head, and perhaps we're going to create a shoulder here. We're right at the 5-day moving average that's flattened out. And what would that look like? Well, if it were to break down like this, I certainly would not short right here. I would wait for it to rally up, come back down, and then short the weakness. I'm not calling for weakness because we have an overall strong market, but 103 is clearly an important level for the semiconductors. The biotechs are kind of still a mess in here. Really, we traveled a pretty far distance this week and ended up with a very small loss, but we are just kind of digesting here. We're below the year-to-date volume-weighted average price. That's that purple line. We're below the 50-day moving average. We're above the 200-day moving average. You look at the 30-minute time frame, and we've got a big mess here. So my philosophy about that is if you're not sure what to make of it, you simply avoid it, leave it for until it shows a better, higher probability setup. Let's talk about Bitcoin for a moment. Here's a daily chart. As I've pointed out, this red line is the volume weighted average price off of the peak, the highest point it's seen. So we saw that the most recent rally off of the low got halted almost to the penny in there. We can also see this green moving average right in here. That's a declining 50-day moving average. My thought on Bitcoin is it probably continues up towards that volume weighted average price and then pulls back. While that happens, what we'll see happen is that 50-day moving average will flatten out and set this market up for a break beyond this level. We're not there yet. I'd like to see it rally up maybe through that volume weighted average price a little bit, pull back, create a higher low, and then if it were to get above 12,000 with conviction, I think you'd have a quick move towards 14. Let's take a look at the intraday time frames, and here is a 4-hour chart. So on here I have so each candle represents 4 hours. This is your 50-day moving average, and what we can do in here is to take it and let's just move this over here. So this is what it might end up looking like for that's not what I meant to do. Here we go. So it might end up rallying up towards that volume weighted average price and then do this and then break higher. At that point, this 50-day moving average will have flattened out and begun to turn higher, and the 5-day moving average will look like this. So when you look at charts, it's not just what you see here right now. You have to look at it and anticipate. If you anticipate, as we did here for on the hourly time frame, the last time that we hit that volume weighted average price off of the peak was just a couple weeks ago, and that was right here. Well, I took a volume weighted average price off that, and you can see what I pointed out here this week is that it was likely to bounce from this level right here. So far we've got a nice bounce. If you bought in that area, I think now your higher low to protect against would be for right here. That is, of course, if you're swing trading the Bitcoin. But right now I'm still bullish on it overall. I think it needs to pull back a little bit if it touches this volume weighted average price from the peak. So that's multiple time frame analysis of Bitcoin. Multiple time frame analysis of gold. Let's take a look at the weekly chart. We still have not broken beyond that 1380 resistance. We still have higher lows above a rising 40-week or 200-day moving average. That hasn't changed. energy is still potentially building for a breakout beyond 1380. If we look at the daily time frame, you can see that we had a little bit of a shakeout here this week. It came down below this low, but so it made a lower low, but we still have a rising 50-day moving average, which gives me hope that maybe this was just a shakeout and it can go back up, rebuild, and then perhaps break higher. Right now, though, it's still not time to purchase gold for a break higher. We have this shakeout. We have kind of a messy chart. The weekly time frame still looking good, but right now we have a lot of mixed messages in these markets. So it continues to be a great time to be a trader. If you're an investor, I don't know how to think the way you do, but I hope you have a good weekend and the markets weren't too bad to you this week. Thank you.